Welcome back to Alpha Recap. Markets close for the day, and we've got a tape full of big themes: geopolitics, tech churn, and high-volume repositioning. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Plenty to unpack from today's session.
So, what really stands out here is Goldman Sachs cutting its eurozone growth forecast and flagging the war in the Strait of Hormuz as a material downside risk. That felt like the highest leverage narrative for the day.
Yeah, absolutely. The note was directional more than numerical in what we saw, but the message was clear. Conflict in that choke point raises downside risk to growth and pushes up the risk of energy-driven inflation.
Right. Walk me through what that actually means for markets in plain terms.
Sure. Think of the Strait of Hormuz as a key artery for oil and shipping. If that artery gets choppy, oil price volatility tends to spike. Bond markets in Europe can swing wider, and the euro becomes more sensitive to flows. Analysts note those moves can compress real returns in fixed income and force short-term repricing across equities. And to add to that, when energy risk rises, you often see rotation toward energy names and sometimes defense contractors, while long-duration growth assets feel pressure. So sector flows start reflecting those cross-asset links.
Okay, so that set the backdrop. Now, on the tape itself, we saw a big move in a marquee AI chip name. NVIDIA finished the day down about 4% to roughly $171 on heavy turnover.
The volume was about 182 million shares, which suggests this wasn't a thin market blip. That kind of turnover implies large reallocation or active position adjustments, folks taking chips off the table, so to speak.
Yeah, that tracks.
So, what really stands out here is that even dominant AI capital exposure names can experience sharp near-term swings when macro risk rises or profit-taking kicks in. Momentum strategies and rebalancing desks definitely felt that today.
And meanwhile, another story on the hardware side. A specialist AI hardware vendor reported early commercial traction, 27 orders across 8 countries within 7 months of mass production.
That's right. I mean, when you step back and look at this, those are real early sales across robotics, smart factories, and edge AI. Analysts note this points to a bifurcated market. Incumbents face concentrated volatility, while niche hardware players are starting to turn product development into orders. Right. And the other thing is, heavy volume in large names creates easier liquidity to trade, but also bigger short-term price swings. So momentum and risk management strategies need to be cautious.
Let's talk about that heavy volume theme. There was an exchange-traded product that climbed about 1 2/3% to roughly $10 on outsized activity, around 128 million shares. What does that tell us?
Volume as conviction. Sustained above-average volume often precedes a multi-session trend if fundamentals or macro drivers back it. But heavy volume also makes sharp intraday moves more likely if flows reverse. So execution is easier, but the probability of quick reversals goes up.
Short reaction.
Wow, okay.
Now, small caps and event-driven names had some headline moves today. One small company had its price target cut by an analyst, citing delayed timelines. Another confirmed an annual festival, a recurring brand event, and a membership-focused company expanded its elite network.
Those are classic examples of what moves small caps: analyst timeline changes, and marketing or event cadence. If milestones slip, you can see liquidity dry up and sentiment shift quickly. Conversely, a successful experiential event can drive short-term traffic and retail engagement, but it usually needs follow-up data to sustain a move.
Honestly, I was a bit surprised by how much the narrative around geopolitical risk showed up in retail attention data today.
Yeah. Google Trends flagged a 400% spike in searches for the word tank, up to about 10,000 searches. That's not a revenue metric, but sustained attention spikes can presage retail flows into related names, defense or energy, if mainstream coverage follows.
Not a great day for chip stocks, and attention flowing into defense is understandable.
Exactly. That retail attention overlay is a useful early warning signal. Traders should watch whether media coverage and company statements amplify that trend.
Switching gears, the briefing also highlighted longer-term thematic steady states, like plastic waste management. The market was estimated at about $48 billion in 2025, with packaging taking roughly 60% of that, and projections to about $59 billion by 2031, at around 3.5% compound annual growth.
That's an important area. Packaging dominance means concentrated demand for recycling and packaging recovery services. Policy and regulation tend to be the main catalysts, so those names react more to legislative moves or CapEx programs than to daily market noise.
Short reaction. So, putting it all together, what patterns emerged from today's tape?
4 quick threads. 1. Geopolitical shock. The Strait of Hormuz dominated cross-asset risk repricing, hitting euro area outlook and boosting energy and defense attention. 2. Tech showed both concentrated volatility in big incumbents and nascent traction for niche hardware players, signaling diffusion in AI demand. 3. Heavy volume repositioning in large caps and active names suggested genuine risk repricing rather than thin market noise. 4. Policy-driven sectors like packaging remain steady, but they'll move on regulation and CapEx rather than intraday sentiment.
Those are helpful. What are the specific things we should watch when markets reopen?
Monitor oil benchmarks and shipping headlines tied to the Strait of Hormuz. Track euro area data and central bank commentary for evidence that the downside case is materializing. Keep an eye on that big AI chip name for price action and volume follow-through. See whether the heavily traded exchange-traded product keeps its momentum. Watch for shipment or partner updates from the specialist hardware player after those 27 orders. And expect analyst or company communications on any small-cap timeline updates. Those can create volatility.
Right. And don't forget to scan Google Trends for whether the tank spike becomes sustained.
Exactly. If it persists and mainstream media digs in, that attention can translate into flows toward defense and energy names.
Quick reaction.
Right.
Final takeaways before we wrap?
3 takeaways. 1. Geopolitics changed the day's risk backdrop, and that amplified energy and defense attention. 2. The tech/AI picture is splitting. Incumbents remain volatile, while niche hardware is starting to show commercial traction. 3. Heavy volume moves across large and active names point to genuine repositioning, so expect follow-through or quick reversals depending on tomorrow's flow and headlines. Analysts note, data suggests and momentum indicates these are the live themes. But none of this is a recommendation to buy or sell.
Perfect. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the next close.
Thanks. Talk soon.